You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday. Yes, it is. 16th day of December, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. Now, the first one, that's private, members only, and those taking the 1-week free trial. This broadcast, on the other hand, is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com, scroll down the page to where it says Noon Broadcast, click the link, fill out the 30-second registration form, and you're done. What will happen is going forward, every trading day, you'll get an email about an hour before the broadcast starts. In the email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. Of course, there will be days when you're out of the office, away from the desktop, but still want to join live. And there'll be days when you're busy, can't join live, but want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN, Christian Financial Radio Network. You don't have to remember all that though. Just youtube.com/CFRN. Not only do we broadcast live or simulcast live every trading day on our YouTube channel, we also archive each and every daily broadcast. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Get to know us. You just might like us. And if you don't, well, that's okay too. Our daily schedule for the afternoon broadcast each day is our devotional, word of prayer, some news, both global and market, recap of the Logic 247 alerts, the concierge trade alerts, and then about 50 minutes into the broadcast, Michael will join us and give us a recap of what happened this morning in the live training room. And we'll do some live trading on the TradingView platform for 30 minutes. And then I'll come back and wrap things up with our good word for the day. The topic of our devotional that we're in right now, and today is day 5 of 5. From humbug to hallelujah, a 5-day Christmas transformation. And if you missed the first 4 days, You can always check it out on our YouTube channel. Our scripture today, 2 Corinthians 5, verses 16 through 21. And I'm going to share it with you from the Message translation. Because of this decision, we don't evaluate people by what they have or how they look. We looked at the Messiah that way once and got it all wrong, as you know. We certainly don't look at him that way anymore. Now we look inside, and what we see is that anyone united with the Messiah gets a fresh start, is created new. The old life is gone. A new life emerges. Look at it. All this comes from the God who settled the relationship between us and him, and then called us to settle our relationships with each other. God put the world square with himself through the Messiah, giving the world a fresh start by offering forgiveness of sins. God has given us the task of telling everyone what he's doing. We're Christ's representatives. God uses us to persuade men and women to drop their differences and enter into God's work of making things right between them. We're speaking for Christ himself now. Become friends with God. He's already a friend with you. How, you ask? In Christ. God put the wrong on him who never did anything wrong so that we could be put right with God. 2 Corinthians 5, 16 through 21. And so on our final day of this topic, I'm going to talk about being made new. As Christmas morning dawns and church bells ring, a quiet yet powerful sense of hope fills the air. For Scrooge, Christmas Day represents a turning point, a chance to live differently, shaped by the experience of a single life-changing night. And for us, Christmas reminds us of a hope far greater than any gift or gathering, a hope that came to us through a living Savior, born in a humble manger. This is the hope we celebrate. It's in Luke 2, 11 through 12. Today in the town of David, a Savior has been born to you. He is the Messiah, the Lord. This will be a sign to you. You will find a baby wrapped in cloths and lying in a manger. While most of us may not have a night as dramatic as Scrooge's, we do have a similar choice. We can wake up on Christmas morning and every morning after, choosing to live with generosity, joy, contentment, and mercy. We do this by embracing Jesus, the very source of hope, whose birth, life, and sacrifice offer a today hope and an eternal promise that never changes. Therefore, if anyone is in Christ, the new creation has come. The old is gone, the new is here. 2 Corinthians 5:17. Are you ready to receive that transforming hope? Maybe it's been a while since you walked closely with Jesus. Or maybe this is the first time you're hearing about a hope that doesn't fade with the season. Like Scrooge, we're invited to face our own brokenness. Turn to Jesus, who paid the price for us, and step into a new life shaped by grace. In this season, we have a reason to rejoice that goes beyond holiday cheer. God's grace has been extended to us through His Son. God bless us, everyone, as Tiny Tim said, and through Jesus, God indeed does just that. Pray with me. Heavenly Father, thank you for making us new creations in Christ. Help us to see others through the eyes of grace and not by worldly standards. Teach us to be your ambassadors, sharing the message of reconciliation with love and humility. Thank you for reconciling us to yourself through Jesus. May our lives reflect your forgiveness and peace as we seek to bring others closer to you. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen and happy Monday. Let me give you the numbers from around the world. I'm going to start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is down 20 points. The Nasdaq's up 184, almost 1%. S&P 500 up 24. The Russell 2000 up 16. No movers or shakers there. In the commodity basket, just came across my screen. President Trump's talking right now. I'm not sure what he's talking about, but I'm sure you'll hear it repeated on the news, on every news program you watch each evening. Okay, crude oil down 75 cents, trading 70.54 last. That's a drop of a little over 1%, or $730 per contract traded. Gold down $6. We'll take it, because we've had some double-digit losses here the last few days. Trading 26.69.60 last. Silver up 2 cents. We'll take it. Trading 31.05 last. Silver's got beat down hard over the last week. In the Asian markets at the close, Nikkei dropped 12 points. Shanghai rose 5. Hang Seng dropped 175. That's almost 1%. And in the European markets at the close, FTSE down 38. The DAX down 92. The CAC down 52. So we had a red day in Asia. It was a red day for the UK. And it's a mixed radio Monday here in the US of A. With the Dow the only one in the red and only down by 13 points. I suspect by the end of this broadcast, the Dow just might turn green. So there's the numbers, here's the news. Many have reported drone sightings in New Jersey since mid-November, and they are lawful manned aircraft, according to the Department of Homeland Security and the FBI. DHS Secretary Alejandro Mayorkas nonetheless acknowledged yesterday some remain unidentified and said the agency is monitoring the situation and deploying additional resources. Now, I watched a video earlier this morning from a guy, I think it was in Texas, but he actually manufactures drones for the military. And his take on it made more sense than anything I've heard, because we haven't really heard much. He said, number one, it makes literally no sense for a drone to be flying at night. And he said There are drones with capabilities to smell things like gas leaks or radioactive material. Now, he said in this video, he spoke with a high government official. He talks to the government all the time because, again, he makes drones for the military. And he said that this person knew a person who had put his hand on one of the 30 missing nuclear warheads from Ukraine, and that it was headed for the U.S. So he's surmising that, and he kept saying it over and over. Now, this is just my guess. They're trying to sniff out that radioactivity that would be surrounding any one of those missing nuclear warheads. Did you know 30 nuclear warheads had gone missing from Ukraine? I did not. It only takes one of them to make for a real bad day for the whole planet. South Korea's highest court will meet today to begin discussing whether to uphold the impeachment of conservative President Yoon Suk-yeol. The court has 6 months to determine whether to remove Yoon from office or reinstate him following Parliament's impeachment vote Saturday. And Colorado standout Travis Hunter, for all you football fans, won the Heisman Trophy Saturday night, becoming the second player in the school's history to earn the honor. Congratulations, Travis. U.S. economic output hit its highest level in nearly 3 years to close out 2024, according to the latest data from S&P Global. Now, obviously, the current administration is going to take credit for that. But between me and you, I think everybody's a little bit excited about the incoming administration. So, call me biased if you will, but those are my thoughts. SoftBank, remember them? President-elect Donald Trump, with SoftBank Group CEO Masayoshi Son at his side, announced today that SoftBank would invest $100 billion in the U.S. over the next 4 years in what would be quite a boost to the U.S. economy. I mean, balance that against the hundreds of billions we've sent to Ukraine to secure their border when we can't secure our own, but that's, I guess, just a discussion for another day. Trump said in his joint appearance with Son that the investment would create 100,000 jobs focused on artificial intelligence and related infrastructure, with the money to be deployed before the end of Trump's term. Trump said the investment was evidence of monumental confidence in America's future. He playfully encouraged Son to make the investment $200 billion. Son chuckled and said he would try. A lot goes on at Mar-a-Lago. That's actually the White House now. From Reuters, incoming U.S. President Donald Trump's transition team is recommending sweeping changes to cut off support for electric vehicles and charging stations and to strengthen measures blocking cars, components, and battery materials from China, according to a document seen by Reuters. The recommendations which have not been previously reported, come as the U.S. electric vehicle transition stalls and China's heavily subsidized EV industry continues to surge, in part because of its superior battery supply chain. On the campaign trail, Trump vowed to ease regulations on fossil fuel cars and roll back what he called President Joe Biden's EV mandate. The Fed could be on the verge of ripping up its rate script for 2025. Investors are betting a final 2024 rate cut this Wednesday, that's this week, is a sure thing from the Federal Reserve. But the bigger question is whether the central bank is ready to scale back what it expects to do in 2025. All eyes will be on the so-called dot plot, a chart updated quarterly that shows the prediction of each Fed official about the direction of the federal funds rate. In September, as the central bank initiated its first rate cut in more than 4 years, the dot plot revealed a consensus among Fed officials for 2 more cuts in 2024 and 4 small additional reductions in 2025. Now that 2025 projection is in question, following a string of stubborn inflation readings and cautious commentary from Fed officials. Some Fed watchers also expect the policies of the new Trump administration to create even more challenges for central bank policymakers. My hope's Trump will just do away with the Fed. Now, JFK tried that once. It didn't end well. So, from Bloomberg, Texas Governor Greg Abbott has a new ambition for the Lone Star State, surpassing France as one of the world's largest economies. Yeah. Abbott predicted that economic output in Texas would soon exceed that of the struggling European nation thanks to booming investment and President-elect Donald Trump's plans to slash regulations on oil, gas, and other industries. Abbott told business leaders in Dallas, Texas is going to surpass France when the new numbers come out, and we will have the 7th largest economy in the entire world. Wow. And the Texans, and they're having to do it with this against a backdrop of an invasion sponsored by our current administration. Shares of Palantir Technologies fell today while MicroStrategy, Mr., rose following the late Friday news that the companies will join the NASDAQ 100 index next week. Axon Enterprises will also join the index before trading opens on December 23rd. The trio will replace Supra Microcomputers, SMCI, Moderna, mRNA, and Illumina, ILMN. Now, I've always told you guys that the indices will always go higher over time for reasons just like this. The S&P 500 we know is 500 large cap companies, but there can only be 500. So for a new company to come in, that means somebody's got to leave. So the board at Standard & Poor's, of course, they're looking and checking the books and the balances and what's going on with all of these companies, looking to see when it's time to shuffle the deck. Well, the NASDAQ 100 is about to do a big shuffle, kicking 3 to the curb and bringing 3 fresh ones in. You see, now the Russell Index works the same, the NQ, ES, the Dow. So you see how over time, by constantly shuffling the deck, those index ETFs, and they're always going to go higher over time, okay? Yeah, you're going to have sell-offs, you're going to have down periods, but over time, they're always going to go higher. Don't forget that. All right, let's bring it home to Logic 247. Here we go. All right, we are in week 333. Over the last 333 weeks, we have issued over 18,600 individual handcrafted alerts. And we've averaged on a weekly basis 20% or less of the alerts being stopped out based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Now, Valerie did this recap this morning at 6:30 a.m. Eastern. I have put out some additional alerts since then, and some of the ones that hadn't triggered have triggered, so she'll update the recap this afternoon as she does each and every day. At the time she did the recap this morning, since the markets opened last night at 6 p.m. Eastern, we had issued a total of 13 alerts. We're still waiting on the outcome of 6. That gave us 7 actionable alerts, of which so far 0 would have been stopped out, again based on market structure, and that simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now, the purpose of the Logic 247 alerts, which can come out anytime around the clock, 2 a.m. or 2 p.m., because futures trade around the clock and we have traders around the globe. Our day session is their night session and vice versa. Now, the purpose of the Logic 247 alerts is to help you learn how to read a chart, because each alert has an entry price, an initial target, quite often a second, a third, a fourth target, and then a final trade to target. With the use of horizontal lines on a 30-minute chart, you can learn to spot what will most likely be support, what will most likely be resistance, and identify the window of opportunity in between those 2 points. If you'll do the work, a couple of months, you won't need my alerts, because you'll be able to look at any chart of any market and instinctively know what the next high probability move is. But that's only if you use them as they're intended, do the work, and as a bonus, you can trade them too. Okay? All right. Long before we had Logic 247, we had our original alert service, the concierge trade alerts. Now they're a little bit different. Different how? Well, number one, they don't come out around the clock. They're posted as a static report. It used to be right after the Globex opened each evening. I'm working on a new thing where they come out 5 minutes before the Globex open. You see, last night they came out at 5:55 p.m. Eastern. Now, if you're a member or trial member, be sure and read this information and make sure you understand it. If you don't understand it, ask me so that I can explain it to you. Okay? So, what this means is every member and every trial member had every one of these targets last night, 5 minutes before the markets opened. S&P 500 E-mini, the Dow E-mini, the Russell, crude, NQ, gold, silver, and bonds. And you'll notice on the indices we've rolled forward to the H contract on the ES, on the Dow, on the Russell, and on the NQ. Okay. The others we had already rolled. So, according to the CME, today is official rollover day. So, right now, the December contract is still tradable, but the volume is shifting. That was a pop-up from Stefan there that Trump has now finished speaking. So we're getting ready to go to the chart. Just remember, as we go through each one of these charts, that all members and trial members had these targets 5 minutes before the markets opened last night. And apparently Trump had some positive things to say, because Stefan just said the NQ and the ES looks like they're about to break out to the upside. Well, we might hit the highest weekly trading zone today. Which, by the way, the weekly trading zones had their 15th birthday this Saturday. Yep. It was December 14th of 2009 that we first published the weekly trading zones. They come out Monday morning at 6:15 a.m. Eastern. And once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. Now, the zones that you'll see on my charts today, those are last week's zones. Why? Because any alert that goes out on Sunday night is based on last week's zones. But once the new zones come out Monday morning at 6:15 a.m. Eastern, then every alert is based on the new weekly zones. So we're looking at a daily chart of the S&P 500. I drew that parallel line the other night in the workshop for no other reason than just to draw it. But we're up against red falling again. 2 days we hit it and ended up closing back at the 60. Look at this 62, how it's held as support. 1, 2, 3, 4, now 5 trading sessions. But we got resistance looming large overhead. And while all the markets but the Dow were in the green when I gave you the numbers from around the world, they weren't deeply in the green. Remember, there was no movers, no shakers. Oh, the NASDAQ. That was a mover and shaker for sure. So we'll see where we end up. The green line is called the BBC. It stands for Bull Bear Cross. When price crosses below the green line, we're bearish and expect lower prices. When price crosses above the green line, we're bullish and expect higher prices. Now, when price retraces to the BBC, the pullback holds more often than not. However, it will eventually trade through. But the pullback held, and the pullback held, and the pullback held 5 days in a row right here. And because we've been in a sideways range now for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trading days, the BBC has actually risen to meet price. So we're going to end up with price pinched between resistance and support. You would do well to spend 2 minutes with the daily chart of whatever you trade before you start trading. Whether it's futures, stocks, crypto, Forex, ETFs, doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. Now, institutional traders, the ones who actually move price because of their account size and the size they trade in, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Why? Account size. Okay? So, by spending 2 minutes looking at the daily chart of whatever it is you're going to trade, you're getting a free look over the shoulder of the deep pockets that move price. Do you want to be a seller here? Well, once you get up here, then I would stop buying. Okay? So looking at the daily chart not only lets you look over the shoulder of the deep pockets, but it allows you to identify where major resistance and potential support are, okay, based on technical analysis from a larger time frame. When you're trading in the direction of the larger trend, your results seem to come a little simpler. Trading's not easy, but it can be simple. Okay. Oh, you know what? I didn't switch this out. Silly me. ESH 25. That's going to shake this chart up. Okay. I'll straighten it out. I'll straighten it out later. I'm not going to do it right now. But when we come back tomorrow, we'll have a daily chart of the proper contract. But the little guys, I did it. And I'll put you on hold for 1 second. Please accept my humble apology for that unscheduled interruption of our regularly scheduled programming. Okay. Yes. Now, those are last week's zones for the reasons I just explained. The vertical lines separate today, Monday. This was Friday, Thursday. Back over here is Wednesday. Now, when price rallies up to a zone, we expect resistance. When it drops to a zone, we expect support. But these zones will go away. Now, the high of the day so far goes all the way back to this area right here. Monday, Thursday, Wednesday. So, we're right there. Next spot for potential resistance is here, here, and then here. We had a gap higher open last night. Now remember, these targets, all of our members had them 5 minutes before the market opened. So we got above the BBC. Price always reverts to the mean. In our case, the mean is green. We call it the BBC, bull bear cross. Okay, so we got above, and then we retraced. And as I said, the pullback holds more often than not. And then we really took off about 4:30 this morning. This candle opened at 61.32 and ran up 7 points to 61.39 over the course of an hour. Yeah. Now, once we hit that target, this is called a bearish cross. This happened on Friday. That's when the red line gets below the green line. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. I would call that good resistance. So we had a leg, hit the resistance spot. See, when you know how to read a chart, you know. Okay. We had a retracement, and another leg, and a retracement, and a leg, and a retracement. And we're not quite in price discovery mode yet because we got to take out the all-time historic high for that to happen. And as we already discussed, we're right up against red and falling. It's possible we could poke through it and then close lower. But the all-time historic high, 61.78.75. Or is it this one? Yep. 61.78.75 put in on December 6th. And we've just been, as I said, 10 days in this sideways range. Is that what I said, 10 days? Anyway. So as you can see, we hit the target. And then on the pullback, it held right at the target. See, when you go through a long target, you should, in most cases, expect a retracement back to the target where it becomes support. And it just so happened we had support times 2 because we had the top of the target and the BBC. On the Dow, this is where we opened last night and we just crawled sideways. We did try to make a run here at the long target. This candle opened at 398 and ran up to 438. So that was 40 points. You need 20 points to get your goal for the day on the Dow. And then we had a retracement. The pullback held. Then we hit the target and the zone from last week. Now we're below the BBC. Now we're about to get another bearish cross. And so price very well may see the short target today. That comment I made about the Dow being the only one in the red, probably joining the other in the green. Now that I'm looking at the 30-minute chart, I don't think so. In fact, how much is the Dow down right now? Let me go back to my numbers from around the world. The Dow's now down 40 points, but the Nasdaq's up even more. S&P's up 27. So when the markets diverge like that, the indices, often you don't get the same follow through that you get when they are all the same color. All right, with the Russell, this is where we opened last night. Now remember, 5 minutes before the open, all members had this target. We opened at 23, we'll call it 73, and ran up 10 points to 23.83. You only need 2 points to get your goal for the day. Now, one of three things will happen when price hits a weekly trading zone. 70% of the time will be consolidation, like this, or like this. 20% of the time, rejection, like that. 10% of the time, the slice, like that. See how the 30-minute candle sliced through the zone like it wasn't even there? And then when it ran out of steam, it retraced back to the zone it sliced through and continued in the direction of the slice. So we get below the BBC and we pull back and it holds, and then we pull back and it holds, and we tried to make that short target, but we didn't quite make it on the Russell. So the support that came in here, buyers coming in early, chased us up through the BBC, through the long target, through the zone, almost to the next zone, putting in a double top, just shy of the zone. What was that high? 98.4, 98.5, so we missed it by 5 ticks. Okay. All right, in Q. In Q's just on fire. So here's where we opened last night. We opened at 22050, and we ran all the way to 22,165. Had a leg and retracement, the pullback held. Now, I'll let you do the math. From the open, you're above the BBC at the open, so you expect higher prices. So 22062. It's basically 100 points. At $20 a point, it's $2,000 per contract traded. Now, is this the high of the day? Maybe. You see the black step line? All the way up, it was on the left side of blue and climbing, but it looks like it wants to cross. And when the step line crosses to the right side of blue and climbing, that tells you to expect a retracement back to the VBC. Does that happen every time? No. More often than not? Yeah. Okay. Now, we opened at 71.44, way up here, above the long target. And then we dropped. We just dropped and hit the short target. We've tried to move higher on a couple of occasions, and we're still trying. We're above the BBC. The BBC's down here. But we would have to take out this high. Now that high and that high, it's basically a double top. So as price approaches 71.20, I'd be very careful if you're trading crude long right now. Gold, here's where we opened on this candle right here at the zone. Ran up to the BBC, the pullback held. But blue and climbing is bullish, so right here we got the bullish cross. And we did make it all the way up to the zone overhead at 26.82. That's last week's zone. Tomorrow you'll see this week's zones on my charts. Never made it to the long target, and we haven't made it to the short target. But there was certainly plenty of room to get your goal for the day, either on the long side or on the short side. This one candle right here opened at 2672.8 and dropped to 2667.7. So let's just call it 72 to 68. That's $400 per contract traded in that one red candle right there. Silver. We opened right at the weekly zone, consolidated for hours, and then finally made the run up to the target, which sent us back to the BVC, which sent us back to the target, and almost to the zone, but not quite. We got up to 31.24. The zone was at 25. Now you only need 2 pennies in silver to get your goal for the day. So this resistance sent us back to support at the zone where we consolidated for so many hours last night. Now silver's trying to make another run to the upside. As you can see, silver has really been hammered over the past week. When the price of silver moves $1, that's worth $5,000 per contract traded. Let's make it simple. Let's go to $33. Okay? To $32. That's $5 grand. And at $31, it's 10 grand. It's a $10,000 drop over 2 days. And now it's trying to turn around. So the thing to watch is this daily chart of the S&P. We're up against red and falling. Now today's high so far, 61.59 and a quarter. All-time historic high, 61.78.75. And I do believe I hear Michael.
Yes, I am here.
He's going to give us a recap of what happened in the live training room. Then we'll do some live trading on the TradingView platform. And then I'll come back and wrap things up with our good word for the day.
Excellent. Excellent. Here we are.
Okay, it looks good.
All right. We will get rolling. Good afternoon, everyone. Today is Monday, the 16th day of December, 2024. If you have not taken a free trial with us and you'd like to take a free trial with us, then all you need to do is go here to mytradingiq.com, click on the purple button right here. And when you click on that, it will bring you to this registration page right here. Just fill it out. First name, last name, email, phone number, 5 multiple choice questions. If you have Ninja, give us your machine ID. If you have TradingView, give us your login ID. Be happy to get you set up. All right, that's all you need to do. Get your indicators indicating on your charts at the beginning of your trial. Now, the results, again, we broke it down into 2 sections today. One, just getting the goal for the day using the normal trend trades with the ribbon and the TV trades trigger, pulling out of the overbought or oversold. Okay, today, if you're going to read the spreadsheet, you go to all the CFTC risk disclosures down the bottom. I don't know if I said that already, but I got to say it every time. Today I took 1 trade, 11 minutes in 1 trade to get to 21 ticks on the NEQ. And at that point, we're up $1,260, and we took a total of 1 trade getting the goal for the day. So quitting when you get the goal for the day so far this month, we're up $3,245. It's over 11 business days, averaging $295 per contract. Quitting when you get the goal for the day on the month of December so far. All right, so on the year now, we're at 115,312. Quitting when you get the goal for the day. I'm sorry, no, that's gross. Actually, that's not even the full gross. You gotta add all that down there into it. But $115,312. You know, this number should actually be much bigger. But anyway, if you quit trading when you get the goal today on the year with one contract, we're over $115,312, averaging more than $492.79 per contract per day. Quitting when you get the goal for the day, if you add one contract per month, so far this year, you would have only had to work 69.73 hours, and you would have averaged $3,197 per hour for those 69.73 hours. What that means is you would have made $222,968 during those 69.73 hours. I used to work more than that in a single week. That is one heck of a work week. It's like Tom Brady money there, 200 grand a week. Anyway, if you were to do, today, when we did continue, after we got the goal for the day, then we switched to the divergence trade using the ultimate slingshot and TV trades trigger. And we got 89 ticks on the NQ, 16 ticks on the Russell, 26 ticks on gold, and 8 ticks on the ES, putting us at 885 per contract once we did that. Now that ended up being an extra 28 trades. So doing just the divergence trades on the month so far in the 3 days that we've been keeping track of it, we're up $3,145, averaging $1,048 per day. All right, that's after we get the goal for the day, then we start doing that. So it's good stuff. You really got to get in there and start doing it. Today on the NQ is where we got the goal for the day. Let's just go to that. All right, and we'll take off the slingshot and put on the context, and we'll show you where we got the goal. All right. Our first trade of the day was right here. We picked up 21 ticks on that trade right there. That's where we got the goal. All right. So after that, we were just doing the divergence trades. Now, the divergence trade is when the blue leads into the overbought or oversold. All right. So in here, it led into the overbought. It was right here that I actually took it. It wasn't in the overbought there. It was right here that I actually took it. And I shorted in there. After getting 21 ticks on the first trade, we got another 12 ticks on the second trade. That put us to 33. Then we got, looks like 8 ticks on that trade, put us to 41. Then we had 48 ticks on that trade, got us to 89. Then we had a small win there, got us from 89 up to 95, a 6-tick win, it looks like right there. Then from 95 to 112 on that. So that's like a 16-tick win, it looks like. 111, 16-tick win. And then we had another small win. We went from 111 to 123, so it looks like an 8-tick win. Is that right? No, 12-tick win. 12-tick win. Then we went from 123 to 125, so that was a 12-tick win. Then, so at that point we're at 135, and then we stopped out, and that put us down to 99. Then we had a 6-tick win, got us up to 105. Then we had a 12-tick win, or was it 8-tick win, got us to 113. Somewhere in there we had another 12 ticks that got us up to 125 at a break even. Then we had a stop out that got us down to 89, and one more break even. Okay, and that's where we ended it on that break even this morning. But if you go through the rest of the trades, right here was one, right? Let me just move this up. We'll do it without looking at price. Starting here, selling the open of the next bar, buying the open of the next bar, and hopefully that's going to give us an opportunity to show you something. Selling the open of the next bar. That was kind of together. That wasn't really a trade there. Selling the open of that bar, buying the open, selling it, and right here would have been the last one. Okay, so let's go back and see how they did. Now, the one thing that I thought right in here, you might have had one trade that ran into the next trade. Like you had a short that ran into a long trade while the short was still going. It looks like that could have been what happened here. Now, as it was, you would have sold this right here. You would have sold the open of that bar and taken some profit on the way down. You see right here, after this bar, it gave a long trade from right here. If you're already short from here, that long trade, this is the NQ, so it has to go 4 points in a profit to move the stop to break even. If you entered there at 14.50, it ran up to 19. So you did have plenty of room to get your stop to break even if you did a reversal right here. Right, but what I was saying this morning is if you're in the trade and you're in a direction, just take the trade in that direction. And if it gives you a reversal signal in the middle of it all, I wouldn't take the reversal signal. Just wait for the next trade. There's enough trades that you can just wait for the next one. All right, so the next one was right here, and that worked out. So the first one worked out. That would have been part of the first one. The next one worked out. This one over here would have stopped you out. Right, this one right here would have gotten it right back. This one right here would have gotten it back again. And this one right here would have stopped you out. All right, so you had some really nice trades in there and 2 stop outs. That's what it looked like on the NQ during the break. Does anybody have any questions about this stuff? Anybody at this juncture? No? Good. Okay, so we'll go over here. Now that is where we got the gold for the day and did all that. Now on the gold, we had a few trades in here. We started out with a break even right there, and that one really tanked. We ended up with a break even, but right after the market's kind of, well, my DOM and the charts kind of froze right in here. So this big gap down might not really be a big gap down on the platforms, but it was my DOM on one platform and the charts on this platform that actually froze. So there was something with the data, I think, in there. Anyway, the next trade that we took over here on the gold, we picked up 6 ticks. Then we picked up 10 on that one to give us 16, and then we reversed right away, and we got 10 going in the opposite direction to get us up to 26. And that was it for the gold. I'm doing the same kind of thing without looking at price. There was a trade right here. It was a buy from right here and a sell from right here. So during the break, there were only 2 trades, 1 buy and 1 sell. And the sell worked out great, and the buy would have stopped you out. It would have been really close to stopping out to the tick. Depends where your fill was. But with a 36 tick stop on this. Oh, this is a golden line range, so you would have had a 15 tick stop. So if you entered here at the open at 67.8, it drew down to 66.6. So it actually, you might have stayed in that and gotten profit on it with a 15 tick stop, right? It only drew down 12 ticks. So you probably would have gotten profit on both of those trades, right? That was the gold. Now we'll take a look at the Russell and our trades on the Russell this morning. We started out with a stop out. We were minus 25 on that stop out. Then we picked up 10 there that got us to 15. Then we picked up 26 there that got us to plus 11. Then we picked up 5 here that got us to 16. Right, and that was it for the Russell. Now, if we do the same thing over here, there was 1 trade right here. 1 trade right here. These don't look like they're going to have worked out very well. 1 trade right there. 1 trade right here. And I missed the one over here. All these trades don't look like they worked out very well. I don't know. We'll see. Bring price down. You would have been buying the open of this bar. That worked out fine. It went 19 ticks in a profit. That was actually not during the break. It went 19 ticks in a profit, and then it turned back down. This one right here, you would have been buying the open of this bar. That did not go enough into profit. With the Russell, it has to go 10 ticks to get the stop to break even, and your entry point would have been here at 5.7, and it ran up to 6.3. That would have stopped you out. This one right here, you would have sold to the open of this bar at 95.5, and it dropped down to 94.7. So you would have had 2 stop outs in a row right there. That kind of stinks. The rest of the day worked out pretty well with it, though. No, I don't think we got every trade, or did we get every trade? Looks like we did. We got that one, we stopped out. We got that one, we took profit. We didn't get that one, that would have stopped out. Took profit on that, took profit on that. We missed this one right here, that would have been profit. This would have been continuation of the one right before it. And that was it on the Russell. Okay. Now the ES is the last market that we had to look at, and I don't really remember what I was drawing. I think I was going through different dojis with this, the Dragonfly doji and the Gravestone doji. Is what I was showing with this morning. All right, that's enough of that. So we started out with a break even on this. Then this is the next trade right here. We picked up 10 ticks in profit. Then we had another break even. Then we stopped out minus 10 ticks, so that got us back to break even. And then over here, we picked up 4 ticks on that, and there was another one where we picked up 4 more ticks to get us to plus 8. I don't know where that other 4 ticks was, but let's see. During the break, there was this right here. Would have bought the open, and did it go 4 ticks into profit if you got the open exactly right at 52.25? It ran up to 53.25. You would have had to get it exactly right, otherwise you would have stopped out. The next one was right here. You would have been shorting the open of that. You would have gotten it right back on that. Been buying the open of this, would have gotten it back again. You would have been buying the open of this. Now the 10 tick stop, if you entered there at 53.25, it drew down to 50.75. That would have stopped you out just right. Let's see. And then the next trade was right in here. I don't think that went 4 ticks either. 54 down to 53.25. Nope. So those two right there would have not worked out at all. Yeah, there's just a string of them right here that weren't working out very well. But that was the ES. We ended up with plus 8 ticks on the ES today. Okay, and on the NQ now. Oh, we already did the NQ. All right, we already did the NQ, so I can just minimize that and that and that and bring this over. And here we have it. So if you've not taken a free trial with us, if you're coming into the YouTube stream right now, if you've not taken a free trial with us, go here to mytradingiq.com. Click on the purple button right here. There's no credit card required for the trial. Click on that. It's going to bring you to this registration page. Just fill out the form. Down here, give us a TradingView login ID if you have one, so we can get your machine, get your indicators indicating on your machine. All right. I know a couple of you guys have given me machine IDs today for NinjaTrader that I have to update. I still haven't done that, but I will get to that soon. All right, so let's get into some trades in here now, if we can. Just going through all of these things. All right. So what you're looking for is basically what you have right here, but it's too late. Right here on the NQ, you have a purchase, a buy. Right there on the NQ, a purchase, a purchase. That's kind of a nice way of saying it, isn't it? You have a buying opportunity right there on the NQ. Hang on. Here we are. All right. So when this gets into the oversold, all right, you have the separation and it gets into the oversold, that's when you want to be buying. Right? I'm long right now, and here it is. Now with the NQ, price has got to go 16 ticks or 4 points into profit. So it's got to hit this right up here. Okay, when it hits that, I'll bump the stop to break even. The risk management is the same as it always was. All right. Now what we expect out of this, well, we expect it to go, well, that right there is a stop to break even. I'm just going to lock in 4 ticks. The minimum that we expect out of every trade is to exceed the prior swing high or low if you're with the trend. If you're not with the trend, then we expect a 50% retracement. Okay, because with these divergence trades, a lot of the time you're not going to be with the trend. You can be counter trend. All right, and if you are counter trend, then you need to be trailing your stop pretty close. Okay. There was something that I did during the break, and I did it on I think I did it on a 25 range bar on the NQ with a 15 tick bracket, and I won 4 in a row during the break doing that. I was just messing with a little bit, but you can see right there, we just picked up 12 ticks on that. Right, pretty easy stuff. And this one here is still trying to work itself out on the ES over here. All right, the last trade that it had was this short right in here that would have stopped you out. All right, so time is it right now? It is 1:12. We have 18 minutes left of trading in here. That's plenty of time to get another trade off. What's the difference of a divergence trade between, well, a divergence trade, Chris, can happen. Well, first of all, you don't have any indicators, so you're not looking for higher highs and higher lows, or a swing high or a swing low or anything like that. You're not looking for the trend. As a matter of fact, it works better in not in a trend than it does in a trend. You know, these last couple of trades that didn't work out on the ES that I pointed out, we're kind of getting into a trend right here, and those trades didn't work out once you get into the trend. But when you're in the choppy stuff right here, you had a trade right there that worked, a trade right there that worked, and this one right here. If you would have shorted it right here from the very top, that would have worked. And this one right here, depending where your entry was, it didn't go 10 ticks against you, so you would have had some profit on that too. But when it starts to actually trend like this, you know, then probably taking the trend trades is the best thing to do. But the difference is, with the regular trades, you just have the trigger, right? And you're just taking trades with the trend, with the ribbon. We can see all 4 lines in the ribbon. You're taking trades with the ribbon when it comes out of the overbought or the oversold in the direction of the ribbon. You got to have the prior swing high or the prior swing low to be able to take a trade. Okay. Yeah, when it goes into it and you have separation, Chris, and you got to have the separation between the slingshot and the TV trades range trigger. But when it goes into it like this right here and all this chop right here, where you normally wouldn't be taking a trade, where it goes into it right here, you're going to short the open of that bar. Short the open of that bar. And still inside the chop right here, where it gets into the oversold, you have the separation between these two. You're going to buy the open of this bar, right? The line, the trigger going into the overbought or into the oversold is the actual trigger for the trade. That's the thing that says, okay, I'm in the oversold, I'm going to buy the next bar. I'm in the overbought, I'm going to sell the next bar. It's because once it gets there, it should go in the direction it came from, right? And if you have this divergence between the black line, between the slingshot and the trigger, what that divergence is doing is pulling it back in the direction that it came from. Okay, so like right here, when it went up into the overbought, you had this divergence right here. This is like pulling it back down. This is pulling against the direction. And it goes up and it pops in, and you just get to short it right there. As soon as you see it close up there like that, you go in there and you sell the open or better. You know, sell the open or higher than the open if you can. And when it gets into the oversold like this, you buy the close. I mean, you buy the open or lower than the open if you can. Okay. So it's the separation that you're looking for. It's got to pop into the overbought or oversold with the separation. That's why I put this blue thing back here, the cover. I put it back there so that you can see when the blue one pops out all by itself. It's really obvious when it pops out all by itself. And if you really put the cover all the way on, I mean, here you put the cover all the way on like that, then you can really see it in here. Right, the blue one popping out all by itself, or the blue one leading out or popping out all by itself is really obvious. So every time it does this, you buy the open, buy the open, buy the open, sell the close, sell the close, sell the close. I'm sorry, sell the open, sell the open, sell the open, buy the open, buy the open, buy the open. Over here, you'd be buying the open. Right here, you would have just sold the close. Sorry, sold the open. Sold the open. I mean, sorry, I said that backwards. I keep doing that. Over here, you would have sold the open. Right here, you would have sold the open of that bar. Right here, you would have bought the open of this bar. Right here, sold the open of this bar. Right here, bought the open of that bar. Right here, sold the open of this bar and bought the open of this bar. Okay, right here, sold the open of that bar. Over here, bought the open of this bar right here. You see it? It's all pretty easy. And this is the ES. You know, one of the questions I got over the weekend was, does the ES work on a 19 range? Well, let's just look at the 19 range today. Okay, you're not going to have a lot of signals, but let's see, the signals that you did have, you had one right here. You could have sold the open. And if you sold the open of that bar right there, before it closed up, it went from 48.50 all the way down to 44. So it went 4.5 points or 18 ticks before it closed up. Then the next one you would have had would have been right here. This one would have just stopped you out. And the next one you would have had would have been right here. We would have bought the open of this bar, and that would have given you, everything that you stopped out on and then some back. So there are only 3 trades available on 19 range, and 2 out of 3 of them were good. And that was just on the morning. That was one of the questions that I had over the weekend. Was, can you do it on 19 range? And I actually did. I ran some automated stuff based on the different time frames, and the 19 range performed better than the 7 range. Actually, I thought I had stuck something out here. Yeah, I did right here. I believe this was on a 25 range, but when I did the 19 range, it performed really well too. This was, but sorry, this is on the NQ. I'm sorry, this is just the wrong thing altogether. This is the NQ on a 25 range. But when I ran the 19 range versus the 7 range, the 19 range did better. A lot fewer trades, than the 7 range, yes, but it did better than the 7 range did. But that's all you're looking for, and you can run on any time frame you want. Now I went up to a 19 range on this, but you can go down too. Remember, for years, Chris, when you started out with us so many years ago, we were on a 4 range. Remember those days? And it's the same stuff. You'd be selling the open of that bar. You'd be selling the open of that bar. You'd be selling the open of this bar, which would have stopped you out. You'd be buying the open of this bar right here, buying the open of that bar, selling the open of this bar right here, selling the open. And you can see all the trades that would have triggered in here today on a 4 range, a bunch of them on a relatively flat day. They would have been buying the open of this bar, goal for the day, selling the open of this bar. Depends where your stop was. You would have had an 8-tick stop on that. So 45, it got up to 47. It didn't. It only got up to 46.25. So goal for the day. Buying the open of this bar, that would have stopped you out. Buying the open of this bar right here. You can't really see it that well. Buying the open of this bar right here would have worked out just fine. Buying the open of this bar right here would have worked out. Buying the open of this bar right here would have worked out. Right here, you would have been selling the open of this bar. That would have stopped you out. Buying the open of this bar, that would have stopped you out too, I think. You see what happens as soon as it gets into a trend, it starts to falter a little bit. But right in here, selling the open of this bar, selling the open of that bar would have been enough to get you stop to break even. Buying the open of that bar, again, get the break even. Selling the open of that bar, goal for the day. Selling the open of that bar, goal for the day. Selling the open of this bar, goal for the day. See, there's just a ton of opportunity. This is on a 4 range, but you can go to a 5 range, whatever you want. You can do it on a 5 range. This is the ES, so an ES on a 5 range is kind of a weird number, but he's doing the same thing. When the blue pops out by itself, pumps out of the bottom by itself, you buy the next bar. Okay. Pops out of the top by itself, you sell the next bar. Okay, and the risk management is the same. You use the same risk management strategy that you would normally use. Okay. Pretty straightforward stuff. It's easier than anything we've ever done, by far. It is the easiest thing we've ever done. And it's got great results. So I put this down to like 25, 26, 25, down there like that. So you can see when it pops out by itself, but you'll also see what's going on behind the scenes. Because when you see the stuff like this right here behind the scenes, ahead of time, they would have been, it would look like this kind of, ahead of time, like this one right here, you would have been buying the open of this bar. You'd be in profit right now. This one right here, you'd be buying the open of that bar. So gold you could still get into. The gold is still there to buy because it hasn't gone into profit yet. You have your separation down here. You could buy this gold right now. The entry point on this was supposed to be here at 9.1, And look, I'm long at 9.1. It's that simple. Again and again and again and again and again and again and again. And the thing that I was doing during the break, I don't think Matthew's in here right now, but I know that he's doing something where he's going to be consistently profitable for a bunch of trades in a row to get his payout. And what I was thinking was, if you have a bar, like on the NQ, for instance, what I was doing was on the NQ, I had it on a 25 range, I think. 25 range, and I had a 15 tick bracket on the trade. So if you get an entry like this right here, right, on 25 range, you get an entry like this right here, you get the entry, right? You get the entry, you get the fill that you want to get, because you don't need to try to get in right away. You get the fill that you want to get on it with a 15 tick bracket. It's a 25 range bar. So usually you're going to get within the same bar, you're going to get your goal within the same bar. You hit your target within that same bar. And I did that during the break 4 times in a row. 4 times in a row during the break. There, there, there. And there was another one somewhere. I don't remember where it was, but there were 4 of them right in a row during the break. I got 15 tick trades. And one of those is just about enough to get the goal for the day. You see this one right here from the 25 range, you would have bought the open of this bar, bought the open of that bar. What do you expect? At a minimum, when you're in a trend, all that stuff is still the same. When you're in a trend, the minimum you're going to expect is for it to get to the prior swing high. It'll go to break even on this gold trade. Then we're going to expect is for it to get to the prior swing high, and then possibly continue up after that. All right. So I know I didn't have a lot of trades go off in here today, but I'll lock in a little bit of profit right here. I was able to go through it all and show you. If you have not taken the free trial with us, again, you need to go here to mytradingiq.com. Right here on the home page, there's a purple button. Click on that. There's no credit card required for the trial. I'm going to lock in more on this. There's 10 ticks. I'll bump that up some. And that's $1,200 right there. That 10 ticks. That's $1,200 for me. And that happened in the last 5 minutes. If you're not doing this, I don't know why, really. If you're not doing this, you're just not serious about making money. Because this is as easy as it's ever been for us. I mean, I don't have any arrows popping up, but you don't really need arrows, right? All you need to do is look at the oscillator. See how this is separated here? Now the black is leading, so that's not going to be anything we're going to do. But just look at the oscillator right here, where the blue was leading and the blue got into the oversold. You could have bought the open of that bar right there. That was a trade. Could have bought the open of that bar. Okay, and through here, over here, the black is leading, so I'm not really interested in the black leading. I want the blue to lead. But now I have 14 ticks locked in on this, 15 ticks. I'm probably gonna get out with 15. 15 ticks locked in on this trade over here. And no, that's 15. Oops, I don't know what just happened there. 15 times 120 is what that is. 15 times 120. That's what I got going on right now. So it's $1,800, I guess. And we're up. There it is. So, I mean, you were all able to get in that with me. It pulled back before it went up. So you were all able to get in that trade with me. And everybody was able to take that trade, that nice winning trade right there. That was really easy to do. This one right here, I wasn't really looking at it. If I was looking at it, it would have been a little hard to get in right at the open because it didn't go down at all. All right. This one over here, I don't remember if we took that or not. There's nothing here you can do. You see, what you're looking for is this kind of thing right here where there's separation between them in the middle. When there's separation between them in the middle, then you can start to anticipate what's going to happen next. All right. It's as simple as that. All right, so let me show you again. If you haven't taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. There is no credit card required for this trial. Click on that. It's going to bring you to this registration page. All we ask for is your name, your email, and your phone number. Down here in the bottom, click register. And we'll send you everything that you need to get going in the morning. If you have NinjaTrader and you want to use Ninja charts, give us your machine ID. Now, keep in mind that the Ninja charts are not a full set of charts. We don't have all the things that we use on a full set of charts. I'm sorry, we don't have all the things we use on NinjaTrader. On TradingView, we do everything that we use. So TradingView, if you don't have TradingView, you can get a free trial of it by going here to the trading platforms page. Just click on that. Watch this video. I'm going to redo this video because this video is now 2 years old. It's got the H contract of 2023. So I'm going to redo this video and click on that. When you do that, you will be sent. Well, you have to give us your TradingView login ID is what you're going to have to give us, right? That is located right here. Your TradingView login ID is right there. If you hover over that thing, just whatever you're logged in as is what we need to enable the indicators for you. Okay, look, this is almost a trade right here. Right, this bar needs to close up and we'll have a short right in there. It could come together in the next minute or so. I doubt it, but it could. There's almost a trade over here too. I don't know how that's going to come together on a down close. They could just both go down into the oversold together. Those are the only two that look like they might give us a trade here in the next minute or so. Okay. All right. Well, guys, doesn't look like we're going to get the trade. I guess. All right. So let me just show you where we are. This is how we ended the morning session. All right. We got the goal for the day on the first trade. We got 21 ticks on the first trade on the NQ after 11 minutes. Then we went on to take another 28 trades. And in those 28 trades, we're up 89 ticks on the NQ, 16 ticks on the Russell, 26 ticks on gold, and 8 ticks on the ES. Put us at $885 per contract in that part of it. In the first part, we were up $105 per contract. Right? So we're up a total of $990 per contract today. And that is it. All right. Thanks, Luigi. I will take care of that. And that is it, guys. With that, I'm going to wrap it up, and I can send it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I am.
Excellent.
Recap of the morning session.
Okay, so today it took 11 minutes and 1 trade to get to, hang on, $1,260.
Great way to start the week.
Yes, it was. It was indeed. Thank you.
Okay, guys, we made it through all the markets. We covered each and every one. The CTAs, we covered the logic. We did the big picture look. Had our devotional, word of prayer. If you missed any of it, you can always catch it in about an hour as it's archived on our YouTube channel, youtube.com/CFRN. And while you're there, be sure to click the subscribe button, hit the little bell, that way you're notified anytime we go live, and it helps with the algorithm at YouTube and enables more people to find us. So, thank you very much. Now, to become a member, send an email to support@cfrn.net. In the subject line, put, "I want to become a member." In the body of the email, just put your name and your phone number. We're not going to call you, but if you give us your phone number, we at least know you're serious. So we don't have a sales department or a phone room. But Valerie will send you an email with all the information you need about becoming a member. And there will be a link. Once you've read the email, you can then click the link and actually become a passport holder. 9 out of 10 new traders fail because they don't have anyone to teach them how to trade. So look in the mirror and say, am I consistently profitable as a trader? And if you're honest with yourself and the answer is no, well, then you know what you need to fix. You need to get a teacher. We train 2 hours every trading day in our live training room. It's an interactive environment. Real trades, real money, in real time, while you trade along and ask every question that pops into your head. On top of the 2 hours of live training every day, you have access to private one-on-one mentoring, no extra charge. The strategy you learn, the indicators you own as a passport holder, are fluid across all markets and all time frames. You'll also get the Logic 247 alerts around the clock. You get the concierge trade alerts 5 minutes before the Globex open each evening, unless life gets in the way, and then you'll get them shortly after the Globex open. Every Monday morning at 6:15 a.m. Eastern, you'll get the weekly trading zones. 15-year birthday Saturday for the weekly zones. And you'll have them every Monday morning. And once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. And if that weren't enough, you'll also be able to attend the members only workshop every Thursday night. And you'll get the golden key that opens all the private channels in Telegram. And one of those channels contains hundreds of previous members only workshops. Do you need to watch them all? No. All you need to do is simply show up every morning for the 2 hours of live training. And if you get stuck somewhere, just request some private mentoring. That's really all you got to do. Trading's not easier, but it doesn't get any more simple than this. Let's wrap it up with our good word for the day. Are you being led or being driven? Exodus 18:17. The thing that you are doing is not good. You will surely wear out. Do you feel there isn't enough of you to go around? Like you're on the cliff's edge and about to go over? Perhaps because you're doing much more than God intended you to do. You see, when God reveals His purpose for your life, He also gives you His power to carry it out. Usually, it's simple and remarkably sane. One of the surest ways to know you are walking in God's will is that you will feel led, not driven. Are you resting less and working more? Are you praying and reading your Bible less and worrying more? Maybe like Moses, you're dashing from one appointment to another, eating on the run, meeting deadlines, and trying to solve everybody's problems while your own pile up. Others may have been impressed, but Moses' father-in-law, Jethro, wasn't. In Exodus 18:14, he says, "What is this thing that you are doing for the people?" Not surprisingly, Moses became defensive. Too busy people usually are. He attempted to justify his schedule, but Jethro didn't buy it. Instead, he told Moses, "The thing that you are doing is not good. you will surely wear out. And what did he tell Moses to do? Shift gears and start sharing the load. Then he bottom-lined it in Exodus 18:22. That will make your load lighter. You will be able to stand the strain. Since when did stress become a sign of spirituality? Or a 70-hour work week the mark of efficiency? Be honest. Are you too stubborn to slow down? Too insecure to say no? Or too proud to ask for help? If so, you need to talk to God. He'll help you. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.